This is Ollin Sykes with Sykes and Company, CPAs and Advisors. We're here in North Carolina. I'm along with Scott Sykes and myself. We work with hundreds of pharmacies all over the country, providing cloud-based accounting, tax mitigation, and tax compliance services. We know we have a number of our clients on the line today. We're glad to have you with us, and glad to have the folks that perhaps have not heard us talk before. And today's topic is, what type of pharmacy owner are you? And you might be sitting there wondering, well, what kind of items are we going to be discussing today with this kind of topic? But I can assure you, in the course of our conversations that we have daily with our pharmacy clients, we have all types of pharmacies that we are running into. So we're going to have that discussion today about who you really need to be in this environment. And again, we appreciate you being with us. And with that said, Scotty, let you take the next slide.
All right. Yeah. So we've noticed working with hundreds of pharmacies trends in the different, I guess, types of pharmacies, and what sets others apart from or what sets the high performing pharmacies apart from the lower performing pharmacies. So that's kind of what we want to discuss today. But first, we're going to just talk about the industry as a whole, the current state of the industry from our perspective here. And it's clear that the industry has been changing and continues to change rapidly. I don't think that's any surprise to anybody out there. In all aspects, PBMs, whatever it may be, the pharmacy industry is just changing rapidly. And with that change, the back office has never been more important, because you have to know what's changing in your pharmacy. How are you managing that change? How are you adapting to that change, and are you using that change as an opportunity or not? And you can't make those decisions without the fundamentals in place in a pharmacy. So that's something we should believe strongly here at Sykes Company, are the fundamentals, and making sure those are in place, because once those are in place, you really can take it to another level. And we've seen that time and time again with pharmacies that walk through our door.
Well, Scotty, let me stop you right there. When
Yeah.
you say fundamentals, let's make sure everybody's clear on what we're talking about here. When we say basic accounting fundamentals, what are we really saying?
So we're talking about essentially the daily point of sale reports, the payroll processes, the accounts payable processes, the daily fundamentals that capture the information on a daily basis, and then getting that into the system in a real-time fashion, which is then, as each day builds up, at the end of each month, you're going to have all the information in there. You're going to be able to have a balance sheet that has all the information in the balance sheet. You're going to be able to reconcile that balance sheet, and and then your P&L will also be reconciled as a result, because the balance sheet ties directly into the profit and loss. So if that balance sheet is missing some key components, or the $100,000 off here or there, there's a good chance that the profit and loss is also going to be off as well. So if you're not capturing that daily fundamental information, you're not going to have the balance sheet, you're not going to have the P&L, you're not going to know what you're doing and how to move forward. So the fundamentals, again, are that key aspect there.
I was actually working with a group yesterday where they were having all types of issues, and one of the issues is that they were entering in batch information at the end of the month, um, and they had essentially an accounting system. They had, of course, their script system. They had one other system they were monitoring, and none of the three tied together. None of the three reconciled. And we had to get them to understand that if you break this down into component parts, i.e., daily, to see what adjustments and what issues and reconciliation problems that you have just at that daily fundamental basic that they would be able to trigger the positive events that would take place when they do that. So um, that's what we're talking about here is real time, fundamental, daily checks, balances, and controls, um, using cloud-based resources like we'll be talking about today. But just want to make sure everybody's clear on that.
Yeah, and I can almost promise that even if you're a high performing pharmacy now and you think you've got the fundamentals in place, that's great. But there's going to come to a point in time that the fundamentals, if they're not there, they're going to break down, and you're going to find some issues. You're going to run into some snags. Um, and that is just a fact that if the fundamentals aren't there, and fundamentally you're going to run, it's going to eventually crumble on you, and that is pretty much a fact. Um, and you know, from our experience, we've noticed many pharmacies don't even have those basics in place. Maybe they're writing the pharmacies writing checks out of the accounting system, and that's about it. They send the file to the accountant maybe once a year, to have reconciliations. You know, those are not the basics, and we see that about 60-70% of, probably 70% of the pharmacies out there do not have those basics in place we just talked about. And unfortunately, there's a strong correlation between those pharmacies and those that are struggling. Those that are not performing at the high levels because they just don't have the information to know how to move forward, to manage, to better serve their pharmacy and what they're doing. So that's a fact that we have seen in practice here.
Boy, it sure is, because we have the opportunity to do something called our RX assessment, and we'll talk about that at the end of the slide presentation. But we have the chance to look at a lot of different pharmacies all over the country, most of which are not clients of ours, and we see both the tax returns and the financial information that is just complete state of disarray, and pharmacies not understanding why they're in the position that they're in. And those of you that are on this call that are clients of ours, maybe once were one of those candidates, or not now that type of pharmacy, and you know exactly what we're talking about. So it's all we're spending just a moment here because it's so critical to make sure that this is in process, because once you've got this in process, everything takes off from there.
Yep. It's like building a house. You know, you have to have a strong foundation. Your accounting is the foundation of your business, and it's going to allow you to build a strong house from there. Um, and you know, we're going to see with the rapid changes in the industry, and with how things are just evolving, that those that are not taking these things seriously are not going to make it. If they're stuck doing things the old way, the way it was done in 1995, 2005, even 2015, you know, if they're not changing and adapting, they're not going to make it. And pharmacies have to make a stand on where they want to take, where they want to see themselves in 5-10 years. Let's see. Let's go to the next slide here. So some current industry trends here: tighter reimbursements. We're all aware of that. Lower margins in some cases. Seeing more DR, GR, BER fees impacting pharmacies. We're seeing the trends increase there as well. Of course, as transparency has gotten better, we've seen that trend increase. And there's probably going to be a continued trend with those fees and expanding those fees. Again, 2 years ago, you didn't hear about GER, BR fees. So you can see that those are PBMs are starting to get creative on how they're recouping some monies here. Clearly, tighter cash flow is a concern for many pharmacies. It really always has been, given the nature of pharmacy, which is you get paid in 20 days, but your wholesale bill is due in 10 or 15 days. So you're paying out the wholesaler before you're even getting paid from the third party. So you can see the inherent cash flow issue in pharmacy. Well, it's gotten tighter, and it's becoming more of an issue. So pharmacies have to adapt, not only how they're operating the pharmacy, but what they're doing behind the scenes in the back office, such as third-party reconciliation, inventory management, that kind of thing. You're seeing opportunities. You know, with the tighter cash flow comes opportunity to better manage what you're doing, utilize technologies, improve what you're doing to combat that tighter cash flow. And we're seeing pharmacies do just that, and it's paying dividends for them. Of course, USP 800 coming into play here, and how the PBMs are actually going to use USP 800 against all pharmacies, not just those that compound. So that remains to be seen. Um, how USP 800 evolves. In 2-3 years, we may be talking about how USP 800 is whatever it may be. It could be a topic of concern for all pharmacies down the road, and we've got a feeling that might be the case. Track and trace, of course, it was delayed and delayed and delayed, but we're starting to see where that's actually going to start picking up pace. And for the most part, I think most pharmacy systems, as well as the main wholesalers, have this under control. From what we're seeing at this point in time, it's going to be mostly an issue where if you have multiple pharmacies and you're moving inventory between pharmacies and making sure you're tracking and tracing that correctly. Again, I think most of the pharmacy softwares are adapting and have the capabilities in place for that. But you just want to be aware of the requirements there, especially if you have multiple pharmacies. Third-party reconciliation, clearly one of the stronger components, trends we're seeing, because in the past, many pharmacies, well, there was no technology really to know what you were owed. Manual reconciliation was too time consuming, really not practical. Now we've got technologies in place for third-party reconciliation. And we're seeing, and we have actually seen, and on the trade show circuit this summer, talking to individuals where they were not getting paid from third parties, hundreds of thousands of dollars. They thought they weren't. These third-party reconciliation systems are designed to help a pharmacy owner. They're going to give you that data. They're going to give you the information you need to not only record accurate financial information, but also to hopefully improve cash flow, to know what's getting paid, what's not getting paid, why things are taking 90 days when it should take 20 days. It just opens up a whole new, again, opportunity for pharmacy owners to really dig down into what their pharmacy is doing or not doing. And plus, you're going to be able to get DIR fees and all the adjudication fees from that system, as well as it captures those 835s coming into the system. So third-party reconciliation is definitely a key trend on that front.
Scotty, let me just make a comment. We are seeing constantly improvements to those systems too in the marketplace. Yes. I know one of the main systems that is out there that we work with, which is the FDS platform that is utilized by so many Amerisource and Cardinal accounts, has actually just recently come out with some pretty major improvements in their reporting. And as this continues to get better and better, the old adage of feel and hope and pray that you get your reimbursements versus be able to track this correctly at minimal cost, making sure that you're paid what is owed, and then whatever is taken out of that from adjudication and from a DR GER basis is hopefully going to be able to be shown even better as we go along. So we've clearly seen in the last year an improvement in those systems that are key to the marketplace.
Yeah, and one of the other items we routinely see on pharmacies that are coming through our doors is inventory management. There's usually a lot of discrepancy here on the pharmacy books and records. So what the trend was previously is pharmacies had the extra cash flow per se to keep a little extra inventory on hand. Today the cash flow is not quite what it was, so inventory management is going to be taking a more of a prominent role here in the pharmacy operations. And you've got technology now entering the world here with inventory management, where you're able to manage trends, manage usage, perpetual inventory systems in place, everything to help you better manage an inventory system get that information into the financial statements, of course, which helps with your management. But keeping that inventory lean, increasing turnover, synchronization. There's a lot of opportunity here in inventory that maybe wasn't there several years ago. So inventory management I think we're going to see more of, and maximizing that to increase your cash flow, because we all know that's $100 bills sitting on the shelf in the behind the pharmacy there. So inventory management, I think we're definitely going to see more of a trend increase there. So there's really 3 tiers of pharmacy ownership that we see. There's the bottom tier, and the bottom tier is typically around the bottom 25 percentile pharmacy owners out there. And these pharmacies are really kind of stuck in the old way of doing things, and they're just focused on scripts, filling as many scripts as they can do. They're not thinking about diversified revenues or anything like that. Just filling scripts. They're really not interested in change. They're going to complain about DR fees and PBMs every single day, but they're not interested in doing what they can possibly do to change or adapt. They're still holding on to the past. There's really no integrity in the back office accounting. They may know that, they're not quite sure how they did, June 30th for the year, because they don't have that information. But they're just stuck in the old ways of doing things. They're running it out of a checkbook, essentially. There you go. Operate the business out of the bank account, and that's something we typically see of those pharmacies. After the fact data processing, and essentially they're given their CPA the information January 1st for the previous year. And of course, you can't really plan. You can't be proactive when you're doing after the fact data processing like that. So there's limits in what they're doing there behind the office. And of course, a lot of times they get surprises on April 15th if they are profitable. Most likely in today's environment, they're getting surprises that they lost money, most likely. So this is not a sustainable picture or a sustainable business model for today's pharmacies. So unfortunately, we are seeing a lot of pharmacies out there that are still like this. And if you're looking for pharmacies to purchase, and you're a turnaround type of pharmacy owner, perhaps this is kind of what you're going to be looking for, because where there's a problem, there's an opportunity, and these could be great opportunities for the entrepreneur pharmacy owner out there
these pharmacies, this tier of pharmacy, Scotty, if they're in business in 5 years from now, will be very, very lucky. It's like I got a call yesterday. A gentleman had 2 pharmacies. He had not received his tax returns for 18. They were due September 15th. Incidentally, his accountant was in jail, which was not a good thing. And he felt like he needed help. Well, and he admitted was an absentee owner and had not been involved in the pharmacy operations, and just felt like things were slipping away from him. Well, it certainly sounded like to me that things had already slipped away from him. And when we see these pharmacies come through the door that are literally operating out of the bank account, can't pay the wholesaler bills, everything is done either at the end of the quarter or end of the year, we know that there's major issues there. And unless they're willing to make the changes necessary to bring them into a modern day type of operation, retail establishment as a pharmacy, there's just no way in the world that they're going to be able to continue to fill scripts, because, oh, by the way, did we mention that most of these pharmacies are doing nothing but filling scripts? So as we transfer over, Scotty, to the next tier, which I think is probably your next slide, we look at the top tier. Now, what is that top tier doing differently than that bottom tier is doing? Well, I can tell you that top tier definitely has a diversified stream of revenue. They're in clinical services. They're doing DME. They may be doing compounding. They may be in some specialty. They may be doing 340B, which can be very profitably. And let me just say this: if you have the opportunity to look at a 340B contract in your marketplace, and one is presented to you by a covered entity, you best make sure that you have a 340B consultant looking at that on your behalf, because that agreement is not written to your benefit. Now, once you have your consultant work with the consultant working for the covered entity, these agreements can be very much win-win opportunities, and you can make a lot of money from those. So can the covered entities. But we see so many pharmacies that have come to us that they just accept what's presented to them by the local covered entity, maybe a hospital or clinic or whatever. They just accept it. And you ask them, well, what does it say about who's responsible for DR fees? Well, I don't know, so I guess that means that I am. I mean, it's amazing to me what decisions have been made in order. Um, Again, those folks who are in that bottom tier, uh, this top tier is all over stuff like this. They're increasing revenues at an increasing rate of speed. Generally speaking, we see the fills increasing at greater than 50% of the total fills in the pharmacy. We know then that pharmacy is growing. And once we see those fills at 40% or less, we know that pharmacy is dying. So when
That's
you look
new
at your
fills. New
new
fills.
fills, so when you look at your dispensing reports, and if you see that your new fills are 38% and your refills are 62%, you need to look at yourself in the mirror and say, well, I'm doing something here that I need to change. And we ran into one the other day that was 63% new. We don't we rarely see that. Obviously, I don't need to tell you this pharmacy was growing dramatically. And again, this was only part of a whole potpourri of clinical services this particular pharmacy was involved in. Their growth rate was phenomenal in what they were doing. Um, all these pharmacies in this top tier are embracing all types of opportunities. They're not worried about the way the past used to be. In most cases, they have everything on a real-time basis as far as their back office is concerned. They look at the accounting system as an asset in helping them operate and manage the business, not as not as an expense, but as a tool to assist them with the proactive advisory and the tax and the tax mitigation and tax planning that needs to take place to maximize their cash flow. And oh, did I mention, are they using technology? Every step of the way of these pharmacies using technology, whether it's in cloud-based inventory maximization systems, whether it's in third-party reconciliation systems that are, again, cloud-based. Again, the key word here is cloud, because so many things are in the cloud now. Um, Whether it be robotic um, equipment they have internally, compliance packaging, and of course, MedSync is huge. 60, 70% of scripts being filled in certain pharmacies is not unusual. And if you're at the 20 to 30% level, you got a long ways to go to get where some of your brethren are at this point in time. We literally have some pharmacies that have the MedSync rate so high, and the days identified in the month with their filling scripts, that they have excess labor during certain times in the month they let go home. Boy, that is sure maximizing your situation, because behind how well you buy is being the key thing that you do in your pharmacy. That's how well you buy, and which is to say, what is your gross margin? Your actual direct W-2 labor is your second most important item in that pharmacy. And if that's out of whack vis-a-vis what your gross margin is, you don't have a chance. And if you're working on reducing other operating expenses in the pharmacy, and those two out of whack, you spend a lot of time in areas that you don't need to. So what we're speaking about here for the last 5 minutes or so is the kind of pharmacy that you want to be. And if you're not there, you can get there. You can go to the trade shows. You can go to you got ongoing webinars that are taking place by a lot of the equipment providers and purveyors. You've got all types of resources that are out there to help you be proactive in taking it to a whole nother level. And I can tell you, the top tier of this 25 percentile we're talking about here are killing it. I mean, killing it. We typically see a pharmacy has 4 to 7% pre-tax net income. Many of these pharmacies are running 10, 12, 15% of total accrued revenues and higher than what they're doing. And they're doing it because they're taking all these aspects, putting them together, and it's just working.
And just a few other things, if you walk in, there's sometimes you'll walk into a pharmacy, it looks like you've stepped back in time. That's the bottom tier. It's a lot of it's common sense, that you just need to have some business common sense. When you walk into your pharmacy, does it look like you're stepping back in time? Does it look like it's new, fresh, organized? You have plenty of product, that the pharmacy's alive. It's basic things like that that actually make a huge difference. Plus, it's the pharmacy owner that's not just focusing on the filling scripts, but looking for new opportunities. We've seen where a pharmacy was beside a school that did a lot of international students and international classes, etc. So he did inoculations for travel, and he was making bukus of money just specializing in that. You see business or pharmacy owners go out and develop relationships with doctors or whomever. It's just really about being an entrepreneur, business owner, and going out there and differentiating yourself, having a modern pharmacy, and using your business acumen to grow your pharmacy. Those on the bottom tier are not doing that. The top tier is doing that. They're networking with their peers. They are constantly thinking about how they can better improve and grow the pharmacy. And depending on where you are or your location, there's most likely opportunities everywhere around you. And we're just seeing pharmacy owners in this top tier that are doing that. That's the characteristics of these top pharmacies. So we've already kind of talked about the fundamentals, but again, you can't really get to any of that if you don't have this in place, because you're not gonna be able to understand what you need to work on, what are the things you can do, et cetera, et cetera, et cetera. So it all builds off of this foundation. Better management and understanding, using accounting as an asset. That was never the case back in the day with pharmacy. It didn't really matter. Today it matters. You can use it as an asset to better position yourself, allows you to be proactive, etc. And we talked briefly about the fundamentals, the daily, weekly, monthly processes, using technology in that process, automating a lot of this process as well. Perpetual inventory is key. We're only seeing about 40% of pharmacies out there with perpetual inventory systems. And, that's unfortunately because the script systems can keep perpetual inventory. Most of them can. You've got other technologies that can assist in perpetual inventory. But inventory is a major component of your accounting system. It's your cost of goods is your biggest expense in the pharmacy. The better you can manage that inventory, the better you're going to see that cash flow. We've seen pharmacies, especially those that are heavy into synchronization, literally are getting the delivery from the wholesaler, and that day it's going in a bottle out the door. So their inventory turns are 20 plus inventory turns a year. And you can't even imagine what that does to that person's cash flow. It's tremendous. So let's see what else
we got a question here.
Yeah.
And by the way, if you have questions, don't hesitate to enter them in the question box. We'll attempt to answer as we go through here. But Tom, a good friend of ours, has a question here. If your PSAO is responsible for reconciling your third-party payments, should an owner spend time trying to oversee this? Well, Tom, my answer is absolutely. You've got to manage that process. These systems don't operate on their own. In your specific case, Tom, you need to be verifying those deposits probably 3 or 4 times a week. That would depend on volume in a particular store. But I'm not comfortable, Tom, with how PSAOs reconcile without you managing that process. So whether you've got a tech in there, whether there's a experienced clerk or whether it's you yourself that are managing that process, someone in the store needs to be definitely managing the process on an ongoing, regular, and continuous basis. So the third party reconciliation doesn't operate in a vacuum, and it's something that just needs to be managed by you as that store owner as you go along.
And it shouldn't take but 10 minutes a day really to make sure all the information's getting in there correctly.
That's correct. It's really once you get it refined down to where you're showing about 95% of your receivables inside of 60 days in your third party reconciliation system, then which is to say that anything else you've got above 60 days, you need to be all over, like on a tick on a dog, figuring out why those outstanding claims have not been cleared out. That's what we refer to as managing the system. So it becomes very important to be able to do that to effectively uh, get your maximum bang for the buck there.
Any other questions?
Don't have any other questions right this second, Scotty.
All right, let me see here. So for those that are not clients on this call or watching the recording here, we do offer an RX assessment service where essentially we take your accounting file, we take your prior year tax returns, we go over that with you on a video call, a deep dive overview of your situation on a video call, which we record and send out to you. But we give you key feedback on what we see, good, bad, and indifferent in your pharmacy, how your tax returns, how they are compared to your books and records, whether we see any issues on those tax returns, and kind of just do a deep dive of that balance sheet P&L, and then we get you on that video call and go through the third party, the inventory, whatever it may be that we see on the balance sheet that's going to really address the fundamentals and what opportunities you may have, and give you kind of a roadmap of the areas you need to work on or what it is you need to get in order as you move forward. But we do offer that service. It is a one-time service if that is something of interest to you.
Yeah, and we give you really a good view in a situation where you're not familiar with the types of things that we do on a proactive basis. We give you a really good feel of and really a roadmap of the things that you need to be working on, that you need to be spending your time on, even if you choose not to move forward with any services that we provide. So it gives you really a third party view of exactly what's taking place right now, both from a tax perspective and from an accounting perspective. And I will tell you, with the Tax Cut and Jobs Act changes of last year, I would say about 50 to 60% of returns that we're seeing have errors in them. And knowing how to get that cured and rectified and or amended is extraordinarily important in this process. And by us doing nothing but laying our eyes on pharmacy tax returns and pharmacy issues and matters like we talked about in this in this conversation today, is what gives us the confidence that we can help you in that process. Also, want to mention today in this presentation, hopefully you've gotten a pretty good idea of how we approach pharmacies in general. In that, who is it that you want to be when you grow up? Maybe is a good way of put that. And clearly, you don't want to just be filling scripts. You don't want to be operating out of a checkbook. You need to have real-time data and information to be proactive in your accounting aspect. You do want to be providing clinical services. You do want to be med syncing and using technology to the degree that you can to maximize your situation. But we're just trying to point out the differences that we see in this marketplace, because we see so much doom and gloom on one hand, but on the other hand, we're seeing so many people being so extraordinarily successful. And it ends up being there is a difference. There is a difference clearly in marketplaces, both in a region and an area of the country, whether that's with various PBMs and third-party payers, but also with the way people are operating. And there's plenty of resources out there to help you. Part of those resources that are out there that we can assist you with is included actually in our media resources library, where we have literally hundreds of videos that are available to you in the public domain. We have been producing these videos since 2013 in mass. Last I counted, there were some 300 videos that are there. We're constantly posting and updating videos, and you can lock in on YouTube, and you get an automatic uh, notification when those videos come out. So, feel free to do that. If there's some particular question that you have, post this webinar today for Scotty or myself. You've got our direct information and numbers there. We're happy to to speak with you and talk to you. We got a few more questions. We're going to go through these. We're also going to be at the NCPA convention at the ownership workshop. Also speaking, one of the keynote speakers on Tuesday, and I believe selling your pharmacy seminar on Saturday morning, and we'll be exhibiting there as well. So with that said, let me give you the next question we have. It would be nice to sit and or see a recorded session of an RX assessment service. And Scotty, I think the gentleman is saying he would kind of like to see an example of that. But I'm thinking we have done a video that's in our media resources library on this. Do you recall that?
I don't think we have published a video on that. But if you do go to our RX assessment web page, it's just, if you go to our homepage, Sykes-CPA.com, and at the top you'll see RX assessment link at the very top. If you click on that, there'll be about a 6-minute video of kind of going through what that is about. But I don't think we have an example of that process.
Okay.
From start to finish.
The gentleman's also asking for examples of what it is we discussed. What I can show you as examples is these slides will be made available to you in a separate push. You'll be because you registered for this webinar. We'll be pushing this out to you. We'll also be posting this on our. We have a web page where all this information goes to, so that'll be pushed out to you. So you'll have that. And certainly if you have questions, don't hesitate to give us a call to discuss your specific situation. We'll be happy to entertain that any time that you'd like to. But Scotty, I don't see any more questions up here today. And again, we appreciate your time spent with us today, and appreciate you being a part of this Master the Margin series that we have here. And I think we have some other scheduled webinars. I'm not sure exactly when the next one is, but if you have registered already for the package, you'll get that automatic notification. And we certainly appreciate you being with us today.
Yep, appreciate it. And any questions, just let us know. We're happy to answer any questions you have.
Have a great day.
Thank you.
Thank you. Bye-bye.